All right, we are live with Aaron from Kalshinomics. Good morning.
Good morning. How's it going, man?
Doing pretty well. How's life? Are you making good trades the last couple of weeks? Last time we saw you was what, 2 weeks ago, I think? Something
Yeah,
like that.
I think it was unfortunate timing for some folks the day after the strikes.
Yeah, it was
But
a rude
I
wake up.
haven't been too actively trading, but certainly monitoring the situation.
Yeah.
So between oil and other markets, yeah.
Yeah, I'm gonna just post this for everyone now, but yeah, you've made some dashboards that we're going to explore today, especially on the oil markets, because everyone's an oil expert. I was trading oil, 19 days ago. I was an OG oil trader. Meanwhile, the whole crypto Twitter people, they came on only 14 days ago. Amateurs.
Yeah, yeah.
Discussing oil markets. Let's get that. And other prediction markets. All right. Yeah, so let's make sure everything is going well, and then we'll get started here. Are we live? Let's see. Hopefully. I don't see us live, but let's find out. Yes, we are. Nice. Yes, we are. Okay. So I think what we're going to do today is we're going to look at calcionomics, see how to parse this information that you have so graciously made for us. And then we'll see if there's any trades we can make on that. And I just before the call, you said you're not an expert on oil trading, right? So this is an
Yeah,
important disclaimer.
I'm an overnight expert, so like I've been yeah chatting with Claude about some of the details behind like the oil trade, but uh, this was more like I enjoy building cool tools and looking at things from like a data dashboarding aspect, and it was like two things in conflict or maybe three. So it's like the war is like driving oil prices crazy, so it's kind of like interesting to watch, and a lot of people have been talking about that. And then Hyperliquid, they have these 24/7 um, oil markets, which traditional markets are really only open like 5 days a week, although I think they open Sunday nights at some point. So it's like now degens or whoever can kind of do price discovery all the time. And then Polymarket, among some other prediction markets, are offering these like bands, basically like will the oil price land in this range by this date, or will the oil price like close on a certain day above or below like certain
Yeah.
points. So it's like aggregating all of these information points to kind of get a better view of the land and what like the volatility is.
Yeah, those markets specifically, I remember when I was talking with Ivan, I was like, this is alpha because these markets are so mispriced. Just on Polymarket alone, they're mispriced because people didn't understand the settlement rules of you have to wait till 2:30 p.m. Eastern to understand where that market's going to resolve. If it goes 118 that night after the second weekend of strikes, it goes to 118, everyone thinks, oh, 100, 105, 110 are a bond. No, they're not. And then we ended up going down and haven't gotten back to 100 since, right? I think I still hold some March 31st no's for that. It's probably going to be dead soon, but well, hopefully because I'm also long oil. But yeah,
I think it's a good long shot, especially if people are looking at like the live prices, because like
exactly.
I don't know what it actually got to, but I think it was like a few pennies for some of those contracts, like especially like the hundred
Yep.
dollar those contract. Yeah, yeah.
100, I got it below, I don't know if it was below a cent. I know I got it below 5 cents because I was on, I'm not one to get good entries. So as long as I'm on the right side, I'm happy. But I was in there like 6 and 5 cents and keeps going lower, but I was still happy there. And you did tweet, was it you that tweeted yesterday that saying you think that people are looking at the 15-minute market instead? Or was that, I know that I saw a tweet from someone yesterday about, I think people are looking at the 15-minute delayed quote of oil instead of the real thing.
Oh yeah, I was replying to that more just out of
Mm,
like curiosity. I think it was may have been Event Waves that was chatting about
yes.
that.
Yeah, I'll just
But yeah, I was like, am I not looking at the real time data here? Which I think like even though Hyperliquid's not like the kind of the source of data, which is like CME, which is kind of I think what they actually settle upon. The
yeah,
reason I use that as my data source was the kind of it's available on nights and weekends.
exactly. Yeah. All right, let's look at some of these screens. Okay, we are ready. So this is just that tweet from Event Waves that I think people are looking, not only do they not know the settlement rules, but they're looking at the wrong feed. I know that when I was buying on Hyperliquid, and at 6 p.m. on Sunday, I go on TradingView and I'm like, let me see how oil's doing on the real market so I can compare real to Hyperliquid, because Hyperliquid was going through the roll where it wasn't actually any of the two prices, May or April or May or March or April. So I wanted to look at TradingView to see what the actual underlying was. But at 6 o'clock, it's just Friday's price. And I'm like, oh, well, this is completely useless. I don't know what
Right.
oil is right now. So I have to get on a call. I'm like, hey, man, can you log into your pro terminal and let me know? Because I had no clue. But yeah, I'm definitely one of these people. Yeah, what's the best time? Yeah, you were asking what the source is. You're asking for $1 million alpha in the replies of Twitter.
Yeah, yeah, please shoot that over. But yeah, I mean, one thing that I also just think is fascinating about these markets is like whenever there's something that's like new and really hot, like it's probably not going to be priced super efficiently. And even though I'm like building cool tools here, it's like I'm like maybe I should have just like built something to actually trade this, but I do think that like these present really interesting opportunities where there's so much flow into these markets, but there's probably not like great models that are maybe there are now, but especially like a few weeks ago.
Yeah, well, we remember Domer with the Pope thing, where when he was interviewed, he was like, "No one is an expert on the Pope. The moment the Pope Francis died, everyone starts from the start line, and everyone's on a level playing field. And it's about how you do your research to get to the finish line, because no one's at an advantage there. I guess maybe a cardinal if he's trading on his own votes, which results in excommunication. But yeah, everyone's at the same starting point. With oil, sure, there's experts already in the field, but for prediction market traders, the average guy, no one knows anything. We all just became equities traders, futures traders overnight. Okay, let's look at Kalshinomics here. So you're gonna have to guide. It's like a product manager. You're gonna have to guide me through the website, and let's see what we have. I think it's labs, right?
Yeah, yeah.
Okay. So this is the oil dashboard on Calcinomics, and what I'm looking at is the hyperliquid price
And are
right now.
you sharing your screen on the stream? I just
I
don't
hope
see it in
so.
our doc.
Uh, let's see. Oh, I'm not. Okay, 1 second. That is awkward. Give me 1 second then. Let's just do one thing here. Um, until then, we're gonna have to take a small break. That is my bad. I thought I was. Um, interesting. All right, let's just be back in 1 second here. All right, we are back live. You can see now, right?
Got it.
Okay, so what are we looking at and where do I go?
All right. So, yeah, we've been building out some new tools on Kalshinomics. So, generally we're kind of just like a market discovery data provider, but my kind of professional background has been like data analytics and like whether it's like data visualization or like making sense of data. So, kind of leaning into that direction. And oil was obviously really hot, so I kind of decided that like that was a good place to like aggregate a few different like data points here.
Yeah.
So what we're actually looking at right now is just kind of the price chart, which updates pretty frequently. I forget if we're on like a 5 or 10 second cadence here, but this is looking at crude oil on the Hyperliquid platform, which again, although like CME is like the resolution source, Hyperliquid gives us those kind of additional time frames. So I think it was like a better place to view. Um, I did do just like a little bit of analysis on like how much volume do these things actually push. And as like a reference point, CME, which is like the biggest source of trading these futures, they do like 30 to 50 billion dollars per day. Whereas Hyperliquid has been like a little under a billion, which is still massive for like, kind of a crypto platform that's starting to gain a lot of traction, but all in it's like only 3% or so, like the daily rate. So just a little perspective there. And then this chart, we can look at three different time frames. So 24-hour, 7-day, and 30-day. And you kind of like drag those if you want to like kind of, isolate that time frame a little bit further.
Mhm.
Even on like the x-axis, you can kind of expand or contract. Um, and then also just if you want to look at like the candles, so the candles are going to show kind of the up down price for each of those like bands, 5 minutes
Yep.
through up to a day.
Yep.
So this is kind of like the baseline. So what's our deterministic view of like what the best estimate is right now, at least according to Hyperliquid traders?
Yes.
Um, and I guess before getting to the prediction market piece, the funding rate is also important. So it's kind of in that gray text. I think if you hover it, it might show like the annualized rate, or that
Yep.
might not be working
Let me
right
see.
now.
Yeah, I see it. I see it.
But
Annualized
okay,
31.4.
so that is like, especially over the weekends, it's really critical because if the price on Hyperliquid is like a lot higher or a lot lower than what the last close price is, that basically like determines like what the kind of funding rate is of like what the current shorts are paying the short and longs. And the idea is that like funding rate incentivizes people to like move the price back to equilibrium per se.
Yeah, so actually, that one I don't. I know funding rate and how it works based on the Oracle price, but over the weekend when CME is closed and there is no Oracle, I know that Hyperliquid like restricts, it caps the maximum price movement. That's why 2 weekends ago we saw oil at, I think it was what, 85 or something, and it was stuck there, or 80 something. It was stuck there until 6 p.m. Sunday. Then it shot up to 118. During that
Hmm.
time, like when it was at its cap, was the funding rate really positive, or yeah, positive, or because the Oracle price, did it not exist? I don't know. Maybe I'll find out this weekend. But I don't remember paying, like I
Yeah.
was holding a lot of CL on Hyperliquid over the weekend. I don't remember paying a lot of funding, but maybe I just don't know what Oracle price Hyperliquid would have used.
Yeah, that's a good question. And to some extent, I don't totally understand that because it's like you're relating it to a price that on the weekend, oil prices probably aren't incredibly outdated, but in the environment that we're currently in, they might be.
Yeah, exactly.
Yeah, I guess not 100% sure on that though.
Yeah. Okay. So let's start to look at the prediction market analysis of this. So, okay, these events are the settlement markets, and on chart, what does that mean? Price bands, bands on price history.
Yeah, So basically, we kind of have this like just simplistic settle chart of like the bar charts, which I think the on chart is like a little bit more interesting. But this is basically just showing what do those bands look like. So the two different like variations of markets that we're including here are on settle, which is saying that on the last day of trading for that month, what is CME closing at? And then based on like what band that actually is, like that's what the poly market contract settles at.
Mhm.
Um, so two different strike dates, end of March, end of June, and then the kind of June hit and March hit market. Um, those are probably a little trickier to price because it really just captures like daily volatility. So for every day that the CME closes, is
Yeah.
it hitting or above or below those strikes? Um, and the idea, if you hit the on chart button, is it's going to plot those horizontal bands of whatever those like settle prices are or those hit prices are, and it might have to move to like the 7 day or 32 day just to be able to like kind of better, yeah, better
Cool.
see that
Yeah.
there.
I'll do 30 day, yeah,
um
to see everything. Cool.
yeah, so looking at this, we got almost $97 current spot price, or I think it's like the front leading futures month.
Yeah.
And then what are we looking at? We're looking at the hit market. So what is the
This is
price
hit.
that any day of the CME close is going to be over 100, which great if you pick those up for under 5 cents because they're trading at 20 cents now on the no, right?
Yeah. They used to be at 60, but yeah, this is
Yeah,
very good.
yeah,
Okay. So basically this is just like for me it would be like my first place of looking to see to then jump into more analysis, right? Like we're not predicting the price here. We're just getting a good visualization of where we're at the current moment. And this is very valuable for sure. This feels like those liquidation prices for Bitcoin, like the heat map, like where
yeah,
you're going to
yeah.
get
The heat
liquidated.
maps. Yeah.
Feels exactly like that. Yeah, I mean, this is good. And these say this is a normal distribution. What kind of implications can I make from this? We're obviously, I guess, more bullish, right? The tail is more towards the higher end, right?
Yeah, so like statistically, you'd see this as like a left skewed distribution where there's just much less of a likelihood on like on that tail. So it's like people are, it's very unlikely that oil will drop $40 to $50, but the chance of it increasing $40 to $50 is quite more likely.
Mm,
And that to some degree can like give you the probabilistic sense of like where we're going. So, hypothetically, you could like multiply all of these bands by their percentages to get some kind of like fair value of like what the March settle actually is going to
yeah, if we
be,
were to
and
do March
maybe
settle,
compare
we
that
would
to
get
current
that.
spot.
And March settle
Yeah.
does Polymarket really only have a 90 plus market? They don't have higher brackets right now?
I'll have to see if they added them because that's what they had at the. I feel like they sometimes
No, you're
do
right.
like
Well, they
at
can't
different
add
levels.
anymore
Yeah.
because neg risk, right? A 90 plus means that's your absolute max. But wow, I
Yeah.
guess they didn't know that what would happen. Yeah, I guess they launched the market
Yeah.
in March,
Yeah.
so but they didn't realize what was going to happen out of this. That's crazy. Yeah, so you would multiply these. Well, with 90, it's difficult, but you'd multiply these and figure out a sort of rough weighted average price. Okay. Um, like to me, when I see this, obviously, when I first started trading crypto, I was under the belief that every candle had a 50% chance to go positive or negative. Um, I still don't know if that's true or not, but based on looking at this, it seems like okay, why wouldn't I go long here, right? Long on the futures market, for example, because Polymarket's telling me oil's going to go up, at least hit up at one point. If I can survive if I can survive getting paid to long, why wouldn't I? Why wouldn't I be long here? It's I don't know how much of an expert you
Yes.
are in trading these kinds of stuff, as futures and equities, but it feels like a good trade to me. And I know I am long right now. I wonder where we're at. Oh yeah, I can check here. 96.8. Okay, so I've been buying between 80 and 100. So probably it's pretty close to my price average at this point. But do you know like what if this chart, this probability chart tells me that it's better to long? Is that a conclusion?
Uh, I want to say
Financial, not
generally
financial
yes.
advice.
Yeah, not never financial advice, but like with some caveats. So like one, we're looking at three different places, right? Polymarket, hyperliquid, CME. Polymarket by far has the least volume, at least like right now. They still have a
Okay.
lot on these oil markets, but yes, I would say if these like markets are accurately priced, then that thesis would make sense. And now that we're talking about that, I might just like build out a fair value as far as like what we're talking about, like simply multiply the percentage chance by the price bucket. And for the settle one, I'll have to make some kind of assumption like let's use the midpoint. And then for the I guess for like the under a certain dollar amount and over a certain dollar amount, that would have to be tweaked out a little bit. But generally agree with
Yeah.
you. I'm not positioned either, but
Sale settle end of March. Okay, so this one has not much higher brackets either. Yeah, probably market needs to add like a higher bracket category. Um, Yeah, so I mean, for this, I know that Polymarket is mispriced in terms of 2 weeks ago with the rules. They probably are not efficient in this market either, and I think that's one important distinction to make. But it feels like, yeah, if you're just a retail guy and you're not too smart on these things, and not that anyone is, but I see 81% chance of crude oil going above 100. 81% chance. And then if I were to go to hyperliquid, what would I see here? I would see that I would make what, 5% if it went above 100, and I can go on leverage and get paid to get paid to long. It feels like a really, I don't know, asymmetric trade. And I know all these Twitter guys, well, the Twitter smart people, stupid to say this guy's smart, pee pee poo poo, what a name. That if he is long oil and he's been telling everyone you guys are morons if you're not long oil, and stop DMing me to ask me for my picks, all this random stuff. But he is long oil based on this asymmetric trade that he's seeing. Like the Trump administration is suppressing oil prices, they can't do it for long. But it feels like looking at what we're seeing, especially on calcionomics with above 100, 80%, above 50, 105 is above 50% as well. It feels like a good trade to make. And I know that's why one of the reasons I'm long, but it's just cool to see a visualization on how skewed the sentiment is.
yeah. Again, I generally tend to agree with you. I think that there's also like quite a few other markets, like specifically like poly market related, that could be relevant to maybe improving that decision making. So like
Mhm.
one that like I think they added like how many ships are gonna cross the Strait of Hormuz, right?
Mhm.
And like that to some degree, I don't know the actual like economics of like how much a few additional ships crossing actually means. But it's like there's all these like little data points that you could hypothetically add on. There a lot of countries also have like these oil reserves that like it seems like they've been somewhat hesitant to like release, but I think some of them have. So there's
Yeah.
all these like little things that could lead to like almost like jump risk, like instead of a price like slowly dropping, it could like immediately reprice it by 5 cents or something. And to
Yep.
that degree, you just don't want to be like too over leveraged, like especially on hyperliquid.
Yeah, that's the issue I always have with longing this stuff. Hey, we're up to 97. We're going up. We're going up. Another
Yeah.
interesting thing is based on like Trump's truths or different articles that the administration seeds into the world. How does oil move? And you kind of know what I'm getting at. I'd like some research on that. I'm doing a research project on my own just to see efficiency, like everyone does, efficiency of the markets, like the different calibration of Polymarket to see if Polymarket's well calibrated. I know everyone's done that. But this kind of research is just incredible. What other things on calcionomics can we look at for the the war? Is
Let's go.
geopolitical still active?
Yeah, to some extent, I guess. Like some of it got removed with the Iran strikes, but yeah, let's
Yeah.
head there. So like, if you click into like the crude oil, like under the event area on the second row here.
Okay. Yes.
So let's just select a few of kind of the mid-ish price markets or something like that.
Yeah.
And
These
then
these ones.
and if you scroll up and like let's type in like Hormuz or something or ceasefire or something like that so we can like add a few other ones.
This is an important one for sure. I'm long both of these. Yes on ceasefire and left. Yes on oil going up. But yeah,
Okay.
let's do this. Okay. And then what?
So yeah, maybe Hormuz, like the straight
Okay.
closing. I think one of yeah, so either of those.
Okay. Got three of each.
So all somewhat related markets.
Mhm.
Again, this has live feeds directly to the order book, so it's gonna have pretty low latency. And one, you can kind of like move these order books around to see what you're monitoring. You know, these have a lot of volume, but like sometimes these are moving like crazy that you can just like immediately see like the order book kind of flipping between them. Um,
Mhm.
but something else that I like to look at is like if, if there are a lot of sharp traders in a specific market, sometimes the order book skew is really gonna be going in one direction or the other. So this like green and red bar at the top, which you can
Yes.
actually adjust by the spread amount. So a little higher up, there's like a filter for do we want to look at 5 cent spreads or anything else like that, and you can kind of just see like if it's really heavy green, that means like there's a lot of bids that are trying to get
Yep.
filled, and maybe the fare is actually a little too low because it's like they don't want to immediately make taker orders, but they're trying to like line up so they get the next fills on that side.
Yep.
So I think that like looking at skew generally is like an important metric, and then also just seeing are these markets interacting with each other kind of thing.
Yeah, so I see for ceasefire, this was at the 10 cent level, but I think even lower, all at all levels, it is skewed for the yes. So let me look at stand here. Um, what was it called? Ceasefire. And these were all strikes. Okay, so we'll look at ceasefire here because it's interesting to see where we are at. Yeah, so for yes, 8,000 share bids versus three and very few. June, same thing. So yeah, and we know, I don't know how much you're tracking, but the sharps, quote unquote, are on the yes side here, based on the fact that we think that um, based on the equities markets and futures markets, ceasefire is underpriced on Polymarket as per rather than the futures because oil is so low that it seems like the market is pricing in that yeah the war is going to end in a couple days. Meanwhile, that's not true. Yeah, so 68,000 share bid, 65,000, 43 on the yes side, and that lines up with what you have here. Yeah, this is nice, and it's a very simple visualization on what's going on. Um, so you think this is valuable? What kind of trade would you make based on this if you had to, like, what kind of implications do you make when you see something like this?
Uh, again, I think a lot of these tools aren't something that like go use this and go 100% off this to like make a trade, but like say that you thought that you're going to buy ceasefire no, but like you wanted to see what the book looks like, and then like other tools. I don't know if Stan specifically does this, but it's like you could even do it on Polymarket, but like who are the top holders on each side? Like am I buying
Yep.
the opposite side as like a bunch of sharps? um but it kind of gives that like sanity check of like if I'm gonna buy a no, but the order book is skewed so heavily in this direction, like maybe I should kind of rethink that.
Yeah.
Or it might validate the point that I'm making. Um, and these not quite as much, but like when I was looking at like the very daily US Iran strike markets, you could kind of tell like does it make sense that we're getting like a 1% increase, a 1% increase, and then a 10% increase, on ended up being February 28th. Who knows if there are insiders there, but like being able to see something like sequentially on like a time series basis can be helpful.
Yeah, we
And
did
I'm
look at that
maybe
before.
building that out for ceasefire. Yeah, yeah.
Yeah, we looked at that before because that was like a premium thing, right? Like where's the premium being priced for each strike? And that was one I didn't understand. And we were on stream the day after the strike, so I didn't really get to talk about it. But in terms of looking at that premium, what was that supposed to show me?
Yeah, yeah. Um, so we have all these dates that are like, will a strike occur before this date, and then literally the next day for the next 30 days, will a strike happen before this day? So one, it was like I was piecing those out to be a cumulative distribution. So like, what does that look like over time? Are there certain
Yeah,
days that are maybe uneven where you can get like a cheaper strike at an earlier date or something like that on the no, um, or like what we were referring to it as is like the hazard rate. So it's like if we can just back this out, if the strike doesn't occur tomorrow, what's the probability that it incurs the day after?
yeah,
And where is that hazard rate spiking? I.e., like when do we think the first day of the strike is going to occur?
yeah. Let me get a screenshot of this that you were showing. This is great. Okay, so hazard rate for each day. I mean, the way I wanted to use this was see because my belief was the Trump administration will never attack on a day where the market's open, right? You saw the meme a week ago that was like the war stops at 9:30 and resumes at 4 every day, right? And it is it is kind of true, not only because the time zone in Iran is 9 hours I think 9 hours ahead, but because they don't want to screw with the markets. So one of the strategies was to short uh, every strike like by Thursday, but long every strike Friday, Saturday, Sunday. And I don't remember what Kalshi showed in terms of the price premium or hazard rate, but it feels like that is probably something you might have seen, or if you didn't see that, that's a trade you could make looking at the visualization on Kalshi, right?
Yeah, I do remember seeing that, and it is kind of super interesting thinking back. And like, I think, let's see, I think like the 27th was a Friday and the 28th was a Saturday. So
28th is
obviously
Saturday,
there's
yeah.
just like a lot of pressure there in general, but you can kind of see it to some degree where like
The 6th.
three, so like the
6th is a
sixth would
Friday.
be Friday,
13th
so
is a
another
Friday.
high date. But maybe you could
Yeah.
short 3/7 if you think like that's another weekend that or long or like take the strike on that date if you think that's like more likely than it should be, kind of thing.
Yeah, and I think that was something I wanted to do. I think there was one thing I wanted to do recently about that, but the peak was this strike and stat arbing it in a way, like just seeing where I can arbitrage because there was no way Trump was going to attack on a Wednesday. You can short that, but you can also long the Friday, maybe get a reverse middle of sorts, because I think these markets were all buy, right? It wasn't on. I think I have that right, right? Like it was by certain dates, so they would all
By
resolve
the end of the
yes.
day, yeah, yeah.
Yeah. Okay, so this was a trade we could make, and maybe in the future, when Trump goes and attacks Cuba, we can do the same thing in a couple months.
Yeah,
That
he took
one
away
that
my
one is
dashboard
crazy.
too fast, but I can use it for other things.
Okay, what other dashboards do we have? And this geopolitical one, this is good. it doesn't show like the hazard rate is something I really like, and there's not an applicable market for it really. But well, maybe ceasefire if they do ceasefire by the day, or because they took out strike markets, right? I think mostly because of the negative PR, whatever was going on.
That's what I heard. I'm still curious if that's like set in stone, but yeah, it kind of seemed like it. Yeah.
Yes, mixed opinions because I think it's fair to keep them. It's also fair to want to for people to complain and say that they're not good to have. Um, Interesting though. Let's see. I wonder you can make a March Madness dashboard. See, like a
I
Nate
was
Silver
thinking
esque.
about it. Yeah. I was just like too much stuff going on. But yeah, I was thinking about that. So these are a little. Oh, I need to fix this with
Fed
Kalshi
rates was what
data.
yesterday, right?
Yeah. So here, this is like a more simplistic view, and right now I'm just pulling in Kelshi data because this is before we kind of layered on Polymarket. But it's kind of just looking at like the two data points, which is like what's the chance of a candidate becoming president, and then what's the chance of them becoming a nominee for their political party.
Yeah.
And obviously, these are super far out markets. You don't like always want to trade them, but maybe you can make a trade and just like exit it to some degree. So like the implied odds for you see number 10 for Pete Buttigieg. He has a 2-3 presidential bid ask and then 3-4 nomination ask. You generally expect that to be like more of like a 50-50 range to some degree.
Yeah.
So it's like if you think that like there shouldn't be a 70% chance of that happening, you buy the nominee and then you sell the presidential. And I do think it might make sense to layer this on for Polymarket, especially just because they have like decimal cent pricing. But again, I'm not really interested in holding a ton of like markets that have 2+ years to resolve. But if it's going to get back to equilibrium, then maybe it's worth picking up like a cent here and there.
Yeah, so I think looking at this, it feels like the most important ones. When I'm looking at some data and it shows like 50, 100 or like round numbers, I feel like there's some problem with the sample size or something going on there, and it feels like that's what it is, especially with like Stephen A at 1 to 2, 1 to 2.
Oh
And
yeah,
on
yeah,
I
totally.
obviously understand that that means he has a 100% chance of winning. I see 200, I'm like, oh, okay, well, this is wrong. But for these top three candidates, and I guess AOC as well, because there has been people talking about the fact that Marco has completely skyrocketed in price. So we can look at Marco Arnom, right?
Yeah, I
Republican
think it's kind
nominee.
of chilled out recently, but at one point he like overtook Vance, at least on Kelshi. I don't think on
Hmm.
Polymarket.
Interesting. Yeah. So with this, because of everything going on, it feels like Trump is putting Rubio up himself, single-handedly, just helping his case to be president. And looking at Calcinomics, I know Predem had commented on my stream last week saying, why is Rubio at a 65% implied odds of winning president? That's completely wrong. And Ivan and I talked about it. Like, actually, I think Rubio would be he thinks Rubio would be a favorite if he were the nominee, which is why that kind of price makes sense. It has settled back down. I think mostly Arnam has settled back down, Republican nominee, 2028. So let's see. Yeah, I think it's settled down a bit. Yes, from 28 down to 26. Okay, not too much, but it's interesting to see instead of just doing my mental math. Yeah, the implied offer. Well, implied. Okay, so when I'm looking at it, I just want the implied odds, but you have implied bid and offer. This is basically just showing. I guess I'm looking at the midpoint of these two. If I were to say an implied price.
That's kind of saying like if you were to take the the taker side on each end. So again, this was like just built um for Kelshi.
Hmm. Oh, implied odds
And
right
then
here. Perfect. Okay. My
yeah,
bad.
yeah.
I need to see
And
this.
then you can also
Okay.
include like taker fees just because like these markets aren't going to actually move on Kelshi. I got so much shit for that that vague pros and cons list I made the other day. um but it like the price isn't going to move on Kalshi until it's like off by a few cents, right?
Yeah.
So
We can talk about that actually, because that was a good one. And I mostly agreed with you there. I know obviously you have Ben Freeman in the comments saying there's problems, but um, this was generally fine, right? I think someone also said no KYC is not a bad thing. When it, you're right, it
that's kind of
probably is
figured.
like a con. But this did make sense. They make money. Fees make forecasts worse. Can't see the data. That's also true, and fewer markets. Yeah, it is the correct list. I'm not even calling them pros and cons. I'm just saying like facts of the matter. This is what these two platforms are, and if you think one thing is better or one thing's worse, so be it. I guess pros and cons. This is your opinion on what a pro and con is, but some people will say no KYC is actually a plus. How do they make money? Who cares? The VCs. It's not our problem. It's VCs. And they have their
Yeah,
own
and
their own stuff.
in hindsight too, like honestly, this is like a lower effort post that got an insane amount of engagement, and I feel
Yeah,
like
not bad.
I could have given a sharper take on some of these, but like I don't know, for better or worse, for being like slightly vague, and I kind of knew some people would come at me. It was just like opened up some interesting discussion.
You didn't know Twitter slop and low effort posts are the ones that go the most viral? What are you doing here? Reading me on
I know
Twitter?
now, yeah. No, I want to be known as a more sharp analytical person, but I'll throw these out every once in a while.
Now the reply from Ben saying that uh, Polymarket has better forecasts, and he was doubting that. Can we expand on? I know that you did reply. Can we expand on what that means? That why do fees make it worse, like a worse forecast?
Yeah, so I guess to some degree, I'm gonna maybe take back or reword the way that I'm gonna talk to this. So like, even like John Wayne was like, "Oh, look at this data. Like Kelshi forecasts on average X hours from resolution are more accurate." And one, there's just like there's these markets are not normalized at all. Like Polymarket offers a lot more obscure markets. Kelshi offers a lot more sports markets. Who knows? Like the predictability may just be different based on that market structure. But more what I was like getting at is like I think the presidential election is really a good example of this. So I don't know what JD Vance is currently trading at to be the Republican nominee, but if he's at 44, yeah. So what are we looking at?
30,
So on
39
Kelshi,
on Kalshi
if you hit
and
like
38,
39
38.
on Kelshi and put like a don't actually trade this, but put like a
Yeah.
100 bid in or something like that.
Yeah, I'm not signed in on here, but I know what you're gonna reference. Putting a bid at
Yeah, so
38, no fees, but 39 turns into 39.7, I think. 39 point something like that.
I think it's like 41 or something like
Oh
that.
yeah?
Because once the
Oh,
price is closer to the midpoint, the fees are going to increase. So it's
okay,
like
fair.
you can't really say that the news media always cite this stuff and they're like Kelshi thinks that JD Vance has a 39% chance to be the Republican nominee, and it's like, well, no one's willing to buy that 39 because it actually costs 40, 50. So it's like the range is actually like 3 to 4 cents different between the bid and ask when you look at like taker fees.
Yeah.
So again, like I trade on Kalshi and like I like both of these exchanges, but like from a real time like latency perspective, like Kalshi is going to excel. And we're looking at March Madness right now, and like I was looking at the game last night, and Kalshi order book is stale. Polymarket is just flipping back and forth on every like 2 cent or every like 2 pointer or something like that. Um, so pros and cons of each at the end of the day, but it was funny to
Yeah,
like
last night I think was it the last game, Miami, Ohio or something, where it was 1 cent and uh on Polymarket they turned decicent price, right? So you could get really granular on what the real probability is. It's just implied odds from sports books, not like Polymarket's pricing it themselves. But
right.
Kalshi was at 0 1 until the market moved to 3 cents or 2 to 3 cents. So you had to wait
Exactly.
for
Yeah.
for something bigger to happen. Um, Now, when people are doing these calibration analysis, it's mostly like the 5% buckets, right? So Polymarket is 93% accurate on markets overall if you look at each bucket, and these buckets are 5%. So does it really matter that Kalshi and Polymarket, like there's these different mechanics going on? Do they end up resulting in poorer forecasts if you look at calibration charts? Do you think? You know what I'm thinking of?
Um, I mean, from like the just like summarized dashboards I've seen, it doesn't really. But from this like what I refer to it as like stale data perspective, it's like you're
It has
always
to.
going to be you're always going to be a little behind, and
Yeah.
like I think that like the better you want real-time data and the more fees that you want, these two are
Yeah.
working against each other. And like, if the data is actually going to be used from like institutions to make real time decisions with like little latency, um, they're going to want the most timely data.
Yeah.
So I'm going to keep pushing for Kelshi to lower their fees under 1 cent so that the price does move back and forth. But I get it. I get it.
And does Kelshi have different fees for sports versus other markets, or is it all the same? You know, I just forget
uh,
what they do.
yeah, I don't really trade sports. I've like thrown some random money here and there for fun. But like I don't think I have any edge there.
Yeah.
I know that like as a maker, you don't get charged any fees on all
Yeah.
markets except sports. You do get
Sports.
charged some amount. I don't know how the taker changes. I would imagine it's like a tiny bit higher on sports,
Hmm.
but I'm not
Yeah.
sure.
Yeah. Actually, on the topic of March Madness, because I do want to highlight Stand, they did just drop their version of the March Madness bracket. So let me get this on quickly here to show what we got because I know you don't trade much, eh, on March Madness.
Not too much. I have some brackets. We'll see. If I'm bored, I might throw some here and there, but
Yeah.
definitely not
So
with like size. Yeah.
yeah, so obviously we know Hive Live is presented by Stand, and this is something they just dropped yesterday to show the probability chart of all of these games in a bracket format. This bracket will show you the location, odds of each game, at halftime, how much time's left, when the game's live, and all the live moving odds of all of these games, so you can track it. I think it's better than the other brackets that I've seen on Poly, where it's just a bracket and no odds on theirs. It's kind of disappointing. But yeah, so for Stan, this is where I'll be looking at to make my trades. And I know we're going to also look at the copy trade results from last week because I started copy trading using Stand. But yeah, this is definitely a great format for a bracket, very prediction market coded, where you have the odds of each thing live moving as the games are going on. This is something really good. As well as we know Stand is, if you didn't know, the platform where you can trade both Kalshi and Polymarket markets, track traders, get whale alerts, use the Octobox, which I use so often. And maybe I'll get all the first round games on here soon. We're starting in what, an hour, and then copy trading and counter trading. Let's see how I've done so far. Oh, we're copying Ivan. We haven't made much money. We've spent our full $750. He's spent our money for us. We have sold a little bit. We are down, I think. No, we're up. We are up. What, $60? This isn't bad. Thank you, Ivan. This is really good.
Nice.
We're copy trading Ivan's new account on Stand, and it looks like what we made 71 cents. I think we made a bit more, but this is very good. So thank you, Stand, for sponsoring our stream, and I will be looking at copy trading Octobox and March Madness now to see what is going on in the world, and no, not just the world, March Madness. Okay, so. Um, Yeah, what is more important, March Madness or the oil markets? I wonder what I have more money on right now. I think I have more money on oil, depending on what where my fills have gone on March Madness. I know Miami, Ohio helped me yesterday. That was good.
Yeah, that's a good game. I don't
Okay,
know. Depends on the person.
yeah. So you just speculate on oh, I said speculate, gamble on
Trade.
the March Madness a little bit. Did you bet on any of these first four games?
No, I was like finalizing my brackets with some buddies. But I'm the winner from last year, so I gotta put out a good bracket.
How
I
long did
got
you go perfect for last year?
uh I don't know about perfect, but it was pretty good. So,
Well, how
good
many
chance to
games
win
did
that
you
by
did
1
you
million.
have? How many games did you have in a row last year? Do you remember? You know, like they
Oh,
go, the longest one is like 49
honestly,
games or something.
I honestly I don't remember like sequentially. Like I probably lost one of like the first round games, but yeah, we'll
It
see how
would
it
be
goes.
nice.
My college Villanova is at the top rightish there. They're the eight versus nine, so I'll be rooting them on, even though they're the underdog despite
How
having
long
the
do you
better
have
seed.
them? How long do you have them going?
Just the one. I actually have Arizona winning it all on one of mine. So
Wow. I'm gonna end up having Michigan. That's a spoiler alert. And maybe some alpha. We'll come back to the stream when if Michigan or Arizona wins and we'll see who is right. Hopefully. Hopefully Michigan. Um I wonder, looking at probabilities, we can talk about this March Madness thing a little bit because obviously we know Kalshi is sponsoring $1 billion prize that I guess you were joking the expected value actually is not much for the individual, less than 10 cents, I think, or something like that. Um, Whereas the $1 million for the top bracket, that is something valuable. On the other hand, Polymarket sponsoring $2 million of rewards for these markets, which is pretty massive, right? The way that they've formulated their March Madness offer, not as flashy as not as flashy as Kalshi, but providing $2 million in reward money that is definitely going to be paid out to a lot of people is a pretty valuable thing, right?
yeah, for sure. And like I get both sides, like especially the $1 billion bracket. It's like, especially from like a short term point of view, it's like it's probably better. I think it is better like marketing. Like,
Mm-hmm.
they're gonna get more clicks, more people like visiting Kelshi. But like as someone that cares like slightly more about market structure and just like improving market forecasting generally. Again, I was watching like the Miami game last night, and like I pulled up Kelshi to some degree, and then I pulled up Polymarket as like this is like night and day, like as far as like seeing how this market actually moves. And it's a combination of the incentives and also like no fees, of course. But I think from a again short term, maybe Kelshi wins, but from a long term value, like we're going to produce better data. I do like the poly market move personally.
Yeah, pretty good. Now, in terms of making my bracket, looking at the probabilities, obviously, I mean, it is just a sports book thing, so it's not like we're reinventing the wheel here. But if I were to, is the plus EV thing to do is to just bet the poly market favorites, right? To for my bracket, like what kind of insight goes in here when you made your bracket? I'm trying to think like game theory perspective. Like, yeah, of course I'm going to pick the 95% for my bracket. That's the plus EV thing to do. It's a 50-50 selection, but it's actually a 95% chance of hitting.
Yeah, so generally across most of them, yes, but like you have to think about like how large is your pool and how many people are paying out. So that kind of decides like how unique of a bracket I want, because if you're just picking the favorites every time, it's like you're likely going to be competing with half of the other people that have like very similar brackets. So it's like I'll usually pick the top seeds, but then like maybe there's like one 4C that's projected to get a lot further than the others, and like I'll have
Mhm.
them make it to the Elite Eight or the Final Four or something. So I kind of look, I forget if it's ESPN or someone else, but they have like the percentage of people that have picked each game throughout the entire tournament, and I try to find, yeah, what's the highest percent but the least likely picked to kind of have that unique bracket.
There is some calculation you could definitely do then, because when we're doing like NFL Survivor, you have the situation where you want to be different. Like when you're at the final six, really, you want to be different because the equity in terms of your selection changes, right? If 100%, if there's 10 people and 10 of them pick the minus 400 selection, it's actually plus EV to pick the plus 350 in that matchup, right? Because
Yeah,
you're the
yeah,
one
exactly.
against the nine. Even if you lose, it was the plus EV thing to do. I think that's something that Flop, when he was doing the Circus Survivor, it was like some game. There were two minus 400s and something like Broncos or someone, and he was picking the Cowboys, like plus 400 Cowboys. Ended up losing, but it was like the right decision. And every other person that was left in Circa had picked the favorite, so he had the equity there. So yeah, that's interesting. So I think ESPN, they only show the percent selected after uh, it closes, but I wonder there's probably some data source that shows percent picked before that you can base it off of. Because yeah, if 80% of
Yeah, I
people are
think I
picking
saw
Kentucky, it
it
makes
for
sense to
Manila.
pick
Yeah,
Santa Clara. Cool. Yeah, that's our March Madness preview. I would like to talk about it more. We'll get some sports betting capper on and
yeah. Bring
ask
someone else
and
on.
ask
Yeah,
for
I
picks.
like watching it, but I'm not the pro here.
Yeah, so we're an hour away and we have hit the hour mark. So we'll call it here. Thank you, Aaron, for being with us today. This is good, and calcionomics is something that I use on a regular basis just for looking at markets. Where I'm sorting by volume and no crypto, no sports, no 0 to 100, 24 hour. Or sorry, sort by 24-hour volume and see, hey, what kind of culture markets can I get into? So it's great.
Right on, man. Appreciate the feedback, and we're still developing new stuff. So yeah, please reach out to myself or my brother that are working on the project, and I'm happy to talk through anything.
Cool. Thank you. Have a good day, man.
You too, man. See ya.